What's up? What's going on? It's your boy Brian Davis, and I'm back for another video. And welcome to the Meditative Investor channel. And in this channel, we talk about stock. We talk about how to become a meditative investor and grow your wealth. Get your emotions out the way, slowly evolve, and make money. Okay. Now, in this video, I'm going to give you an update on the stocks I talked about in my last video. Okay, I'm going to give you an update on what I feel what's going to be coming in the next month, 2-3 months, and also just a recap on the overall portfolio and how it's doing. Okay, because transparency, we're all about that on this channel. I'll show you my portfolio in just about every single video, how much I'm down, how much I'm up, and things of that nature. So if you like that type of stuff, and if you like to just be involved in channels like this, go ahead and hit that like button, hit that subscribe button if you want to follow. If not, that's cool. But let's go ahead and hop into the video. So we're going to start with opening up and taking a look at the portfolio today. It's red for me, it's green in my other portfolios, but in this portfolio in particular, which is more of an option, a lot higher risk portfolio, I'm pretty red, guys. So as you can see, I'm down 2.37% on the day, on the week, up 2% on the month, down 18%, 3 months, up 11%. On the full year, we're still up over 200%. So I like to zoom out and look. But as you can see, guys, I got some management to do in this high risk portfolio. My all-time high was almost around 14K, somewhere around there, February 11th, which was the all-time highs of a lot of people's portfolios. And as you can see, it just trickled down, lost almost 40% from all-time highs. You know, this is a risk portfolio. I only started off with $2,413, so I still feel pretty good about this. I learned some lessons along the way, and I'm going to be sharing that with you in videos to come. I can't pack it all in one. Don't want them to be too long. So let's go ahead and start off with one of the stocks I talked about in my last video, which was, if I'm not mistaken, it was PAVM, PAV Medical. And as you can see, since I talked about it, it's probably been like a week ago since I talked about it. It's up 15%. I've been owning this stock for a while now. I brought it to the channel a couple months ago, right before this run up, somewhere around here in this area. So if you hopped into that play, congrats. I'm holding this long term because, as you can see, it's a long. Like if you zoom out, I mean, it still has the potential to reach its all-time high, which is $14, $15. They're just now getting their footing. They're just now getting their products out, you know, into the hands of these physicians. I work in the medical field, so I took a look at these products. They have about 4 products that I think can have a huge impact on the world. So, and how certain practitioners, you know, do their practice, make it a little bit easier. So I'm going to continue to hold my position. I have around 300 shares. Average cost of like $1.93 per share. So I'm just gonna hold those right now. I sell cover calls on them, bring in premium because they just opened up an options chain on it, which I'm super stoked about. So that's one of the companies I told you about. The other company that I told you about, if I'm not mistaken, was BNGO. BNGO. Last week, up 17% from last week. It was a rocky journey from that. You know, it went down a lot here, but hey, that's with these growth companies. You go through that ebb and flow. That's why you really got to work on your meditative state during while you're investing, because your emotions can really get the best of you, and that's when you panic sell and you make a mistake. That's what you don't want to do. Okay, but it's up 17%. I do own a position in my Roth IRA in BNGO, and I also own some option plays that I bought a long time ago, and I'm down 85%, guys. I'm gonna do my best. I'm just gonna hold out until hopefully it just shoots up, but or at least within the time frame, because they expire May 21st. So if they shoot up before then, awesome, take my profits and go. But I did buy these at a pretty high premium because I had a feeling that it was gonna go higher, but this correction came out of nowhere, and it happens. So down 85%. If this thing's make it up to like around minus 30, minus 20%, and if it looks like it's going to be stagnant, I'm going to cut my losses and go, okay? But I do own 100 shares of this in another account. Average cost is like around $8.88. I like that position right now. I mean, I can't put any more money in my Roth IRA. It's kind of maxed out. So I'm gonna just let that do what it do and ride this up. But I do see this at around, back at its all-time high, around 15 bucks, $15, $16, hopefully here in the next 3 months. We'll see, okay? And the other stock that I showed you was, let's go to, here it is, HMBL stock, guys, right here. Look at it for the past 5 days. We're down. Went from 4s to 361. Humble, well, I think it was TSMPD whenever I told you about it, which was, I don't even know, somewhere in this area, but the last time I posted the video, somewhere around here. I think it's probably at like a $3 mark whenever I told you about it. And they had changed their ticker symbol from TSMPD now to officially Humble. And I'm telling you, I have huge convictions for this play. I got in when it was like around 18 cents per share. That's when I got in, and I've been averaging up this whole time. And they did a reverse stock split. So I have around 300 shares with the average cost like $1.08 per share. And I'm completely holding on to this play, guys, long term. 3-5 years. It's in my Roth IRA, so the gains are tax free. And I'm going to keep purchasing this play on significant dips, like hitting 200-day moving averages. I'm in no rush to sell this stock because I see this being up there with PayPal and Square and things of that nature, because what they're doing is pretty massive. It's pretty awesome. So those are the 3 plays I told you about last week, or I think a week and a half ago, and they have been doing pretty well. Now let's go ahead and give you a quick portfolio update, guys. And I am potentially going to be making some changes with this strategy in this portfolio, because this right here, guys, is just unacceptable. It's just unacceptable. Didn't panic sell or anything. It's just that correction got the best of me. I was in too many call options at that time, and it just hit me hard, okay? So the plays I'm in now, I'm in a couple of calls now. I'm in Walmart calls, which I see the April or the Easter rally hopefully will give me a nice bump tomorrow. I'm going to closely monitor this position. I'm currently down 36%. And my threshold right now as far as my loss is between 30 and 50%. Once I hit 30% in my call option plays, I'm going to be monitoring the play pretty closely. And between 30 and 50%, if I don't see a nice increase in the next day, in the next day or two, I'm going to cut my losses and run. No more of what happened to BNGO. It happened in a couple plays. It really happened so fast on me. No more in BNGO and things like that. I'm not going to take those kind of losses. So I'm going to cut my losses and run 50% max. I'm going to start watching at 30%. Write that down, okay? I'm in another couple calls here with a gaming company here, and this one doesn't expire until April 16th, so I have time. My price target for this one is around $37, hopefully in the next 1 to 2 weeks. We'll see. These expire 4/16, and I'm currently down 27%. I just got into these at around a 22-cent mark, I think, is what my average cost. Average cost up around a 22-cent mark. So hits 37, I'm out. Taking profits and go. And as you can see, guys, here I'm mainly in credit spreads. And I'm also going to adjust this strategy as well, because the companies that I have been choosing to do credit spreads in, they have not been the best companies to do credit spreads on. And I'm learning along the way, because you see these companies and you're like, you know what, I believe that this company isn't gonna close below this price by this expiration date. But then when you go to close out the play, it's just a little bit more challenging, because it's not a highly liquidable stock when it comes to credit spreads. So I'm learning my lesson here. I did buy a couple fiber calls here. $300 strike price, probably wasn't the best strike price, but I have high hopes for fiber in the next 2 weeks. Fiber has been making this move. Let's take a look. It took a nice beat down actually from here, from 323 all the way down to 192. So I'm hoping to ride this thing back up in the next 2 weeks. We'll see how fast it can move in 2 weeks. Because I mean, in 1 week, it went from 214 to 270. So hopefully we can get that kind of move in the next week. If we do, these options will print money, and I will be very grateful. Very grateful. Right now I'm down 33%. Okay. So as you can see, guys, this is a very high risk portfolio. Okay. I didn't really plan on doing this portfolio, to be honest. It just kind of happened. As you can see, I have not been adding money to this account for a while now. I've just been playing with my $2,000 that I had in there, my $2,400. I add more money to my Fidelity portfolio, which I don't share on this channel just because it's not aesthetically pleasing. And it has my account numbers on there and all this stuff. So, and I'll have to do screenshots and just talk over that. So we'll see. I may add it later. But that's ultimately it, man. I'm still in my Trateris stock, my View shares, which I am just holding down 27%. Average cost is 10.47. Got it whenever it was a SPAC, and it just kept going down. So I'm just holding. I do believe in the company View. I really like what they're doing and their products that they have. I mean, right now, it's kind of been hitting the floor here around 742. Right now is all-time low, if I'm not mistaken, around 731. Yep, 52-week low, 713 actually. So we'll see if this is a floor. If so, if you like the company, it may be a good time to accumulate some shares if you believe in what they have long term. And that's ultimately it, guys, as far as the plays that we got going. Now, what's happening in the next couple of months? Let's transition to energy, EV, and what's about to take place. Biden's infrastructure plan and all these things happening. So be on the lookout for EV and energy plays. Some key plays to look at, which I own. I do own Hyliion here. It's at $10.90, guys. Like, this is, I mean, I'm bag holding on this for I have this in my other portfolio. Average cost around 18 bucks. I like the company. I like the CEO. He's a chill dude. May not be the best at PR, but I mean, I believe in what they got going in the future and how things are going to be transitioning in the next 5 to 10 years, for sure, when it comes to EV, hydrogen fuel, and all that jazz. I believe that that's going to take place. It's happening slowly but surely, and I'm just going to hope this for the long term. I have around 200 shares of Hyliion, and this right here, as you can see, I'm down a nice amount, around 1,600 bucks to be exact. And this may be a good time to accumulate some shares, guys. We'll see if this is a floor. If so, you know, this may be a nice accumulation zone if you have high convictions for this play. Another company to look at is FuelCell, which I own, and my Roth IRA. FuelCell Energy, and you can potentially ride this back up to its all-time high, 26 to 30 bucks. I'm going to do my best to ride it out because I sold the cover call on it. It's gone past my strike price, so we'll see. Another play to look at is CPHT or CHPT, I think. ChargePoint, guys. This thing had a massive run today, up 18%. You guys can ride this thing all the way back up. It was hanging around the 40s, 39s. It's at 27 major still right now. So those are some plays to look at as far as in the clean energy and kind of EV space with this new infrastructure plan. Of course, there's other companies out there. Of course, infrastructure deals with, you know, lumber, maybe steel, maybe concrete, and areas of like that where you can kind of get into, kind of keep your eye on, and have, you know, you can do it as a swing play, long-term play, whatever fits your criteria. But I'm going to update you next time on kind of how I'm going to be changing up what I do in this portfolio to not be so risk on, like hyper risk on, and, you know, and grow this thing, you know, at a nice and steady rate. Kind of change up these companies I'm in, because a lot of these are really highly speculative plays. I get it. So I want to kind of shift over to something a little bit more risk, but not like super risk, you know. So I'll let you know. I'll fill you in. And that's it, guys. That's all I have for you. for today. Be sure to check out the Discord link in the description below. You can follow along all the plays that we do, not only in this portfolio, but I also make in the other portfolio. Overall, guys, we're still up on a year, 200% on this account, 80% on the other account, and 80% on the Roth. Overall, we're still up. This correction here is good. It's all good. We stay meditative, we stay chill, we stay calm, and we keep adding fuel to the flame, adding money, buying power into our account. And that honk is letting me know that the video is over, guys. So blessings. Hit that subscribe button. Much love. Later.